Finding profitable trades in Manic markets. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. Our risk disclosure. We aren't financial advisors nor a broker-dealer. We throw that up there because I actually spent over 15 years in the brokerage world, and a couple of the other individuals that work with us here at TheoTrade also spent some time in the brokerage world, which I'll explain here momentarily. Copyright disclaimer. It's mine. It's not yours. Listen. What I wanted to throw up on the screen over here, this is our address, this is our phone number. So we are based in Scottsdale, Arizona. If you ever need to get a hold of me after this evening, okay, I encourage you, just shoot an email. We use a common inbox. Shoot an email, support@theotrade.com. That all right with everybody? So you can email us. By the way, I answer emails a couple hours a day. Everybody here answers emails. We even answer trade-related emails, which I'll discuss here a little bit later this evening as well. But hit us at support@theotrade. By the way, I was asking everybody where you're joining from this evening. I am broadcasting not from Scottsdale. I have decided to run to the mountains. It's 3 little kids at home still, so we are in Payson, Arizona, in a very small mountain town. But hey, there's a Walmart here, right? As long as there's a Walmart, you can survive. Listen, this is why you're here tonight. Every time I do a webcast, one of the most important things to me, I want you to be able to walk away with something definitive, something that you were not aware of before, something new, and something that is tangible that you can be using literally tomorrow. It's one of the most important things. So I stress that to you right up front. Otherwise, this wouldn't be worth your time. And I'm going to make it worth your time. So a few topics. First of all, find what strategies have become the bread and butter trades of TheoTrade in volatile markets. For both investors and traders alike. We may be in a rally the last couple of weeks. Nevertheless, volatility is still extraordinarily high. Number 2, see where some of the largest market opportunities exist and what strategies you can use to harness these trade ideas. Number 3, why markets are going to remain volatile for years to come and how to capitalize on the opportunity. That's one thing. It's very argumentative right now. Nevertheless, okay, these markets are going to remain volatile for years. Discover how you can build trades with limited risk through maximizing returns. Number 5 over here, find out how you can short markets and individual stocks, even inside your retirement accounts. Now, that's one thing. I'm going to talk a little bit about long, okay, and I'm going to talk a little bit about being short throughout the course of the evening. Hope that's all right with everybody. This is going to be a little bit of what we term a long-short strategy. Does that make sense? By the way, this is the part where you guys can chime in. These are not rhetorical questions that I asked tonight. How you can generate also weekly returns while offsetting your portfolio's risk. All right, that's important. And see numerous real trade examples. Listen, every single example that I give you tonight, this is not examples. These are all trades, okay? I do not talk about anything unless I have skin in the game, okay? That means working trades, working capital over there. That is imperative that you understand that going in right now. I will talk about any of my positions. I will show any and all of my positions, okay? Complete and total open book. All right, with that, our gift to you. Stay with me, okay, until the end of this evening's webcast. And we'll actually give you the SPX expected move indicator. By the way, this indicator is constantly being updated. It's $197 value. We're giving it to you free. Why? Stay tuned. Okay, that's it. It's keep your attention throughout the course of the next hour, and we're going to give you a spectacular indicator. One of the reasons, though, I want everybody to see what this indicator does and what it can do specifically for you. And I'll describe it here momentarily. But this is 3 years. It's actually now over 3 years of weekly expected moves. And they're all my hand calculated expected moves. This is an indicator that literally has changed the way that we view markets. And I'm going to show it to you right now. But again, I'm going to give you a link. That link is going to be directly at the end of tonight's webcast. And again, as I said, I'll try to be, we'll probably be wrapping up a little bit over an hour from right now. But let me explain again what this indicator does. So you see these little hash marks, higher or lower. It's an expected move. It's a range. That range, okay, is based On the SPX, it's from the options chain. Now, some people don't necessarily speak options geek. That's okay. All right. But what you're looking at on this particular indicator, right? And again, it's imperative that we just go through this for a second because this is such a wonderful indicator. Okay. If you just take a look at it, see these little highlighted candles? That's a pretty big one. This is actually a huge one. There's another huge one here, another huge one to the upside here, a little one, another little one. Okay. And I can go on and on for a half an hour. What it'll actually tell you, okay, and what it dictates, okay, the study defines efficiency or lack thereof in markets. Okay. Basically, when you see, all right, that wild, huge candle, that is the marketplace breaking outside of what was anticipated by the options marketplace. And it actually displays wild inefficiencies in a marketplace. Okay, just so you know, 11 out of the last 13 weeks, okay, we actually moved outside of the expected move. You're like, well, what does that mean? Well, that's of critical importance because the marketplace becomes an utter free-for-all. And I think that you guys would agree it's probably an utter free-for-all out there. However, one of the most interesting things about this indicator, we were showing, okay, massive inefficiency prior to the major sell-off in here. And that's one thing I continually kind of detail with this particular indicator. All right, we're going to give that to you again. I want to reiterate once again, we're going to give that to you right at the end of the webcast. We'll actually give you a link. Again, it is a link, okay, to a site. On that site, you'll be able to download that indicator. So with that, housekeeping. Listen, everybody, you're pretty much sequestered to your home, right? But I'm going to tell you something. Listen, tonight, okay, what we're talking about is a skill set. Pay attention because we're going to fly through a huge amount of material. Listen, shut the door. Turn off your Skype, your chat, okay, your Facebook, whatever it is. Put the phones on silent mode. Kick the kids out. You know, one of the things is you're sequestered to your home. If you have kids, you have dogs, okay, the dog can stay. But this should be a little bit of quiet time. You're going to need some quiet time because, again, we're going to throw a lot at you in a very short period of time. You took the time to be here. Pay attention, okay? It's important. Focus on being here. A little bit about me. My background. So again, my name is Don Kaufman. I watched order flow for 15 years. That's why I'm here. I guess, you know, that was a big portion of my career, and I'll talk a little bit about that here momentarily. But what I'm getting at is here, my background. I grew up around traders. Okay. I grew up around traders because I had family that traded in Chicago, started in the 1970s. Well, I started trading 3 weeks out of college in 1998. So it was actually the summer of 98. It was right before the fall of long-term capital management. I went to work for a pretty good size firm inside of Chicago, the Chicago Board Options Exchange. And while at the Chicago Board Options Exchange, I met some individuals that, you know, they traded in a pit next to us. And they asked me one day, hey, why don't you come work for us? Okay, we're starting a brokerage firm. And you don't have to stand down on a trading floor and yell and scream for a living. And we think you'd be wonderful. So I went to work for him. And that firm was actually called Thinkorswim. So I was at Thinkorswim from 2001. I actually, I think I was employee number 12 or 13 at Thinkorswim. I like it. Lucky number 13. Anyway, at Thinkorswim, I went on to help the company go public in 2007. We were acquired by TD Ameritrade in 2009. And actually, I built the education division of Thinkorswim. I helped build a lot of the tools on Thinkorswim. More importantly, though, I went on to actually run education for all of TD Ameritrade. At the time, had 7 million clients. And that's where, well, they gave us access to order flow. And we learned a tremendous amount. What order flow basically is we watched everyone's trades and everything they did, and we studied them. And that's what it is. We studied trades. We figured out what worked, what didn't. Okay, and that was specific. You know, people all the time, they're like, I traded on the floor. Yeah, trading on the floor means absolutely nothing. It doesn't mean anything anymore because the skill set is so different today from what we did, okay, 15 or 20 years ago on a trading floor. We learned, okay, at Thinkorswim and TD Ameritrade is how you actually make money, how retail traders succeed in here. And again, what you're going to learn here tonight comes from watching literally billions of dollars in other people's mistakes. and again, what works best for retail traders. So that's a little bit about my background. I still do a couple of TV appearances every now and again. This is actually TD Ameritrade TV. They got me in studio. I do appearances on there almost every single week now, but this is one that was in studio. I will do CNBC from time to time. This is the most memorable. It's myself against Mr. Wonderful. All right, enough of me. Let's get down to it. Okay. You got to have skills. And I can't stress this enough. I wanted to start this presentation, a little differently tonight. I really like doing these webinars because many of you, you're coming from all different walks of life, okay? From all different levels of skills, okay? But this one slide, I just got to reiterate again. You got to have skills, okay? Bottom line. Moving forward, you better have a skill set. We are no longer going to be a monkey capable of throwing darts to be profitable in here. And I didn't want to poke fun at people, but that's most people's strategy. And again, please don't take that the wrong way. But the vast amount of people, what they do, right? They just go and buy some stocks. Or they're blindly throwing money into mutual funds or indexing, buying like ETFs, like spiders and so forth. Okay. This is bottom line. They get bonds as they get older. Huh? Come on. How many of you guys actually own a couple of bonds? Anybody? Okay. Anybody using any bonds out there? Because they're dead, which we're going to talk about here in just a moment. The bottom line, traders in the years to come, they're going to way outperform. Okay. Traders, okay, are going to way outperform in the years to come. So you're going to hear a lot about mutual funds and ETFs and bonds. They're going to underperform trade, and it's important. Moving forward, you got to have skills, okay? You got to have skills because this is not going to be a one-way ticket either to the upside or the downside, right? And it's critical that you guys understand that. Listen, you woke up and everything is completely different. And I think that right now, you're looking at the marketplace, okay? And you're probably thinking to yourself right now, yeah, we're rallying. Forget it. We're rallying, okay? Listen, we can tell people are less engaged immediately the moment the market actually rallies back up. They're like, it's going to be okay. Let me tell you right now, everything that you're going through is completely surreal. From being stuck in your house to going to the store with everybody with a mask on, okay, to trading in this environment. If you're involved in trading or, investing in this environment, everything is completely surreal and completely detached at this point. And that is critical. And it's critical to understand that detachment, okay, will eventually come to an end. But you have to realize when you woke up and everything's different, all right, everything you know about trading and investing over the last 11 years has changed. What we've just witnessed in the last 5 weeks, this is going to transform financial markets from this point forward, right? You're going to have to adapt. Don't look for a short-term recovery. Just don't look for the short-term recovery. I know the Fed, save me, Jerome Powell. I'll talk about that as well. But don't look for the Fed to necessarily be there. Recovery, this is going to be long-term fiscal damage, okay? Long-term fiscal damage has been inflicted. Real pain is going to be felt. If you missed it, I saw somebody who's like, oh, yeah, a couple of people joining from Michigan. 25% of all working folk in Michigan have now filed for unemployment. 25%. It's been 5 weeks, 25%. Now, maybe some of them have been furloughed and so forth, but I'm telling you right now, you're going to feel the impact of the current crisis for years, if not decades to come. Remember, okay? This is not going to be an overnight thing. And I asked the question, this is not really a leading question, but how do you view, okay? And how different will markets be? Like, why are they going to be different? Like, how are you going to view markets differently? And please, these are not rhetorical questions. I want to know, chatting, how are markets going to be different? Well, I'll start with this one. Holy Fed! Okay. You're like, well, what are you talking about? Okay. So I say, holy Fed. This is actually from the Fred database. This is the Fed balance sheet. If you've never seen it before, allow me to take you into it. And, we'll have a little bit of fun over here because, and I kind of highlighted this in this presentation right here. Okay. I highlighted it and started it right here. Okay. What is right here? Right here happens to be none other than 2008. This is the financial crisis. So I wanted you to see this because in the financial crisis, when they hit the accelerator, that is 1 trillion. So that's 1 trillion right there. And we shot right at that point to about 2.3 trillion. Okay. And then they continued doing what's called quantitative easing until the balance sheet got to 4.5 trillion, right? They started to taper it. Everybody panicked when they tapered. They put it back up and but wait for it. Boom. Okay. It's almost off the side of the screen right there. We just jumped, from approximately 4.2 trillion, to we're just north now, about 6.1. By today, we're closer to 6.2 trillion. That's how fast. They just dumped $2 trillion into the marketplace. The entire financial crisis. What did we see? Well, from 1 trillion up to 4 trillion. It took some time. So that was 3 trillion at this point. And that's 3 trillion. We've already done, over 2. And we just getting started, people. We're just getting started. And that's when I say, how are things going to change over here? So everybody assumes right now the Fed's got your back. Really? If they're throwing $2 trillion into the marketplace in the last 5 weeks, do you think they actually have a handle on the risk? Did you ever question this before? Do they even know what the risk is? Because I sure as hell don't. I don't mind saying that to you either. I got no clarity whatsoever. None. In fact, if you actually heard some of the bank earnings that came out this morning, JP Morgan, Jamie Dimon came out this morning. He's like, it's going to be the most severe recession of his entire career. So I'm listening now because forget everything that you know. Jamie Dimon is the only remaining CEO, at a major bank that went through the financial crisis. And if he tells you it's going to be the largest recession of his career, that the financial crisis is going to pale in comparison, I think you should pay attention. Why do you think the Fed is on the accelerator right now? Because they can't even get their arms around how big the issues happen to be, which all boils down to this. You better make decisions. You better start making them. What are you going to do with these investments? You've got 401ks, you got IRAs, you got long stock positions, you got mutual funds, you got bonds. What do you intend to do? And I don't want to hear so far I've sat there and done nothing, and it's worked out pretty good because the marketplace has come back. This is going to be far from over. As I said, years of risk over here. And I'm going to pick on you guys for a second because bonds, well, that's where the Fed has actually been dumping capital in. And an unfortunate side effect, is bonds are going to yield nothing. I mean, we're sitting at 0% interest rate. For those of you, if right now, if you want to go out, and you want to buy yourself some bonds, you can. You can buy yourself some bonds. Come on, tell me, what does the 10-year, what does it yield? Oh, that says 7%. Oh, let me help you out there and put a decimal point in front of it. For 10 years, you can achieve 0.7%. Ooh, sign me up for that one. You can't save capital. You can't go into the bond market anymore. You can't go to the junk bond market anymore because now the Fed's in the junk bond market. Everything has changed. You better make decisions. Listen, don't flush your money. You don't have to be brilliant in this business. You just have to understand a little bit more than your competition. You need to learn a couple of skills. Those skills are going to revolve around profitability from volatility. I'm going to say that a couple of times tonight. Profitability from volatility. You don't necessarily got to be right, but you're going to have to understand that we are going to be volatile. Don't expect volatility to subside anytime soon. So we have a global recession. They haven't called it that yet, but they will. It's global recession. Bailouts are everywhere. The amount of capital that we're throwing at this, I was talking about the Fed a second ago. The Fed, by the way, basically has unlimited buying power at this point. So they've already gone in with $2 trillion. I mean, the interest rates are basically nil. By the way, when I say bailouts are everywhere, the airlines signed tonight on the dotted line. The airlines are being given $25 billion. Do they have to give it back? No, not really. They're just being given $25 billion, but they're not allowed to fire anybody. It just keeps getting better out there. Liquidity crisis is brewing. Stock buybacks. That has been the biggest and supportive, market in this business over the last, 5 to 6 years. Global oil prices have completely crashed. Nearly every industry and service, okay, is going to see just epic fallout. Bankruptcy is going to be an option in a lot of different firms over there. Give you an idea of bankruptcy. Look at somebody like Carnival. They went out and actually took in all this outside investment. Okay, and right after they were done taking in all that outside investment, including they took some Saudi money, then they had a no sale order for 100 days. Have to love that. Okay, the depth of the damages are just without clarity. Okay, as the crisis is still unfolding, and even though things might be getting a little bit better, okay, especially in like places like New York City or Italy or Spain, getting better is just going to start. Okay, to reopen the economy, unto which we might get some clarity. Listen, core strategy and trade logic. I want to introduce to you, okay, and one of the most important things is that you understand these strategies. I want to introduce to you real world strategy that you can start using tomorrow, okay? And I have a big aversion to risk. I hope that's all right with everybody. I don't like putting my neck on the line in this kind of volatility, and you should not either. It's important, okay? It is incredibly important. Don't put your neck on the line out there. Listen, moving forward, it is imperative to implement a form of a long-short strategy. All right, real quick, okay? How many people even know what that means? Long, short, okay? Effectively, okay, I'm going to make this easy. I'll make the easiest way possible. You're going to have to be long a couple of things in your portfolio. And then when everything that you're doing in this business, you're bombarded by, like if you turn on CNBC, they're like, you should buy this, you should buy this, you should definitely buy this. Oh, you should buy this and this, okay? For the time being, you're going to have to be long, short. You're going to have some long, you're going to have some short, okay? It's imperative for your survival. You're not going to survive an onslaught of volatility without this. Plain and simple, okay? And again, if there's one thing you're going to take away tonight, you better understand implementation of a long short. And long short can be done in a retirement account. I don't want to hear this like, I can't do it. Yeah, you absolutely can. In fact, I'm going to detail just that. But you will not survive, all right, the next year to 18 months without long short. And that is one thing that is absolutely, again, definitive in this business. That's the one thing that finally everybody can actually agree on. All right, long short strategy is necessary moving forward. Today, we're going to discover a strategy you can use in order to profit from stocks heading down. Because listen, most of you understand the concept of, hey, the market can rally. I got it. Okay. So I'm actually going to focus tonight on heading down, okay, or range bound without taking extreme risk. Now, every strategy that I discuss tonight, okay, and the specifics, you can do this to be bullish or you could do this to be bearish. But tonight, I actually want to focus on the getting short side of it. Now, okay, I have watched the marketplace every single day, okay, pretty much since 1998, about 22 years ago. And I am more than aware that over the last, 3 weeks, we've had a little bit of a rally in the marketplace, okay? That's exactly why we need to talk about getting short. And that's why I'm advocating this, because this ain't going to be a one-side ticket to the upside. What do you think? The S&Ps are going to go right back to 3,400. We're all going to hold hands and come out of this alive in 6 weeks, after being sequestered to your home. It ain't going to work that way, okay, no matter what the Fed throws at this. So let's talk a little bit about getting short. Allow us to briefly review the structure, the risks, and the logic of getting short the market. Shorting is, in effect, selling shares that you don't own. And people go, how do I sell something I don't own? Okay. You borrow it. The shares, okay, we short are borrowed from our broker and sold with the intent of later buying the back at a lower price. So listen, some of you guys may understand a little bit about shorting. Okay, let me know. How many people here really do fully understand shorting? Okay, or a better question is, how many people don't? Okay, who here says, I understand shorting? Okay, or I have no idea what a short happens to be. I'd love some feedback on this one. Because initially, and I want you guys to understand this, initially, I am going to talk about using stock. Stock! Okay? So I'm going to talk about stock, and then we're going to replace the stock, and then we're going to take it a step further. And by the way, everybody that's experienced, okay, everybody that's experienced in this business, this is like the slide they look at and they go, oh, this is like the Disneyland, man. This is grade school stuff. you should bear with me because I'm going to show you stuff that you're not aware of. I don't care how skilled you are in here, okay? I'm going to show you how, okay, to create really effective positions on the short side without necessarily extending yourself into incredible risk. So hang with me here for a moment if you actually understand this example, but I got to start somewhere. So we're going to go out and we're going to short stock. By the way, I call every stock that's, fictitious. People are like, it's ABC stock. No, mine is stock. So we're going to short stock at 135 per share. Now, this is the first question that always comes up. How, do we go out and sell this? Like, how do we sell it? You literally go out and open the position by selling. So where's the shares come from? So the shares are actually borrowed from the broker. Where's the broker get them from? Okay. Well, that's actually kind of fun. When you were signing all that paperwork at your brokerage firm, you guys remember all that when you opened up the account? Well, in that, they actually talk about hypothecation of your shares. Okay. They also talk about being able to borrow the shares. So right now, I'll give you an example. AAPL. Anybody in here own it? Of course you do. Okay. Somebody in here owns Apple. You actually own Apple. Me? I want to what? Okay. Oh, my pen. Okay. I want to go out there and I want to short Apple. You know what happens? Okay. The brokerage firm lends me your shares. Do you know about it? No. Do you have to know about it? No. You're like, I don't want that to happen. You ain't got a choice, especially if you have a margin account. They're allowed to borrow your shares. Does it impact you at all? No, of course not. It doesn't impact you in the least. But yeah, that's how it works. So we're going to go out there and we're going to sell stock that we never even owned. I mean, by the way, selling short is done in business all the time. Okay. If you went to online, you ordered a computer. What happens when you order a custom computer? They sell you the computer. Let's say they sell you the computer for $2,000. Okay. Then they turn around and they go, holy crap, we actually have to build a computer. So what do? They sell you the computer for $1,000. They buy all the parts and all the crap for, $500. They slap it together. They ship it out. They put a Dell sticker on it and boom, you're in business. Okay. But selling stock short. So here you're selling stock at $135 a share. Okay. What do you want the stock to do? You want it to decline in value. You want it to decline in value, maybe down to 95. You make $40 a share. What happens if it doesn't decline? What happens if you sell something, at 135 and then the stock, it goes up. Where does it go up to? Let's make it 150. What do? You're like, oh, I'm throwing up over here. You lose $15 and then you panic and all of a sudden the stock is at 160 and the next thing you know you're down like what? Like $25. You're like, oh, make the pain stop. And then the stock like dives all the way down. It's wonderful business. Okay. That's shorting stock in a nutshell. We okay? Everybody okay? All right. So with that, well, let's get to a few what I call real deal examples. Now, everybody has the assumption that I'm always short and, I have carried a lot of short positions and I've carried a lot of long positions. Right now, I'm long short, meaning I have some short, some long, and it's actually kind of a nice mix because you know what? Day-to-day basis, there's been some nice capital rotations worked out beautifully. But before I go any further, all I want you to understand at this point is we're going to try to profit from something moving down. We'll talk about that something in a moment. Before that, we got to get to this. Short positions, they've got some issues. Whoa, I got a lot of issues with you people. Listen, short positions technically have unlimited risk to the upside, right? So in that the aforementioned example, you go out there and you sell something for what? For 135, and then all of a sudden that something turns into Amazon. Next thing you know, it's at $2,000 and you're in the bathroom crying. What happened, honey? I shorted Amazon. It's hideous. You can't get caught. You can't get short with that amount of risk, especially in a marketplace. And people get caught into this constantly. The other problem is, so you have unlimited risk, like stocks could run up indefinitely, right? Short positions, though, they tie up heavy amounts of capital and margin. That's not good. And short positions, gotta love this. They can't be placed in retirement accounts. Ruh-roh, raggy. Short stockholders also, they have to pay dividends. Now, fun fact over here. See this word over here? Dividend? Ooh, that might become a thing of the past. That word dividend over there. I mean, there's going to be a few stocks that pay dividends, but I'll tell you what, dividends is going to be a huge question mark. You got to wonder when companies like ExxonMobil are starting to clip their dividends out there. It's chaos, right? It's absolutely chaos. All right. So these are the issues. Ties up huge amounts of margin. You can't do it in a retirement account. You have to end up paying the dividend. It could turn into Amazon. You're going to be just like, horrified by that. So what do? Well, how can we build a short position while controlling our risks, not paying any dividends, and place the trade in a retirement account? You got to have all these. Okay? You got to have all those factors. I'm going to come back to that in just a second. Here, whoops. Okay, here. First, let's find a short candidate. I'm going to pick one for you. I'm going to pick a short candidate. Consumer staples. They've remained unscathed in the current environment. Okay, literally, a few consumer staple stocks appear like your Walmart, like your Costco. They appear to be impervious to recent volatility. But there's actually an interesting fact over here. Okay, in every recent bout of volatility, by the way, in almost every bout of volatility, did you know that consumer staples have been crushed along with the rest of the S&P 500? In most cases, okay, the tech and consumer staples have actually been the epicenter. So, okay, there's only so much toilet paper one person can consume. By the way, the toilet paper jokes, they never get old. They never stop. I'm convinced that people are they are literally like building castles of toilet paper in their home. So I'm going to show you something interesting in a trade that I've actually had on a considerable amount. What you're looking at over here, and I'm telling you right now, I'm selecting the candidate for us. Okay. I have a little experience in this one, so I'm going to select the candidate for us. And the first candidate that I'm going to select for us in this example is going to be what we term the XLP. Again, it's the XLP, which is what we term, okay, an ETF, okay, and that ETF it's consumer staples, okay. This is the ETF for consumer staples. What I wanted to show you is really relevant because everybody's like, no, people are going to buy toilet paper. No, they're going to buy everything, okay. This is consumer staples precisely 1 year. So what occurred is consumer staples are pretty mellow. They're pretty mellow. Hit a brick wall. Now check this out. The consumer staples, okay, and again, this is over the last year. They were up just about 14%. They fell and flat on their face. They were actually down, okay, at one point by 15%. So right there, you have basically a 30% decline, right? So a 30% decline. But look, okay, by the way, this screenshot was taken today. Look at the bounce. The bounce is huge. They're now up, okay, 5%, and this is year over year. So it's on a rolling 1 year basis. Year over year, those things are up 5%, okay? Now, before I go any further, I'll show you trade details later, okay? I was short this entire time to the downside. I covered in this neighborhood here. I'm re-upping the position, all right? And again, as I said, I speak, okay, about positions that I have on. That is it. I will never talk about a position that I am not willing to put capital forth to. So I actually selected the XLP because in recent volatility, the recovery inside of the XLP has been actually better than the rest of the marketplace by a long shot. So how are we going to do this? As I said a moment ago, okay, I want to build a short position. I want to control the risks. I don't want to pay dividends. I want to place the trade in a retirement account. I got to hit all those factors, okay? Finding a candidate, to me, is easy. Finding a candidate is absolutely easy. And it's one of the things that I can't stress enough, like finding that candidate. That part I can do all day long, okay? The hardest part, though, is this, okay? We need to get short without shorting the stock. In our aforementioned example, okay, we shorted shares of XLP, okay? In a substitute of the short shares, okay, we're going to elect to buy a put option contract. Now, time out! There's a lot of people here that have no idea, okay, what buying a put happens to be. If you're new to options, you're like, he said the O word, okay? The O word, what's the O word? It means options. People are like, what's the O word? Is it naughty? No, it's just options, okay? So listen, what we're going to do is we're going to create what's called a synthetic short, So I can go out, and I just want to kind of highlight this for you for a second, okay? I can go out right now, and I can short this particular stock, and I'll tell you exactly where this thing is trading right now. I can go out, and I'm actually going to change the color here, just so you guys can see this a little bit better. I can short, okay, this product all day long, okay? And where can I short it? I can short it at, it's about $57 right now. So I can short it at $57. But if I short it at $57 and the thing runs back up to where it was, right? Which is plausible, it's possible. I'm going to get hurt. Okay, I'm going to get badly hurt because I shorted it at 57. That thing could run back up. I mean, for all I know, it could be at 70. And you're like, whatever, man. You know, you're only going to lose that's $13 times however many shares. Obviously, if I short, I want us to go down to where? I don't know, like 40, maybe 30. Let's get crazy. You know, let's see how far down it can go. But the problem is, okay, that unlimited risk. The problem is using short shares are going to tie up ridiculous amounts of capital. There's dividends to deal with. I got to get rid of it all. So what I'm going to do is I'm actually going to use what's termed a synthetic. What's a synthetic? Okay, like, you know what? You call a football, it's pigskin. Okay, but a football isn't really pigskin anymore. All right, it's just not. It's most of the time a synthetic. What is it? Okay, probably does better, okay, than pigskin, holds up better, okay, is more environmentally friendly. Okay, everybody cares about that right now. But all I'm saying is the synthetic needs to do everything that the original did, okay, but it can do actually more for you, and that's exactly what using this put does. So in the put option, okay, we're going to limit our risk. So I'm going to give you a quick example. So the stock is trading again right around the 57 level. Okay, am I going to short the stock? No, I'm not going to short the stock. Instead, I'm just going to buy a put. I'm going to buy a 63 put. Now, for those of you that are brand new to options, just hang with me here for a second. You buy a 63 put. What does a 63 put give you the right to do? Anybody know? Okay, for those of you that are brand new, what does a 63 put give you the right to do? It gives you the right to sell, okay, shares at 63. You go, but Don, I don't own any shares. How am I going to sell shares at 63? You're exactly right. But if you buy that put, it's all the way out in June. But if you buy that put, okay, it gives you the right to sell shares at 63. Now, you have no intention of ever selling the shares. You don't want to get short. All you want to do is buy a put. Why do you want to buy a put? Because it only costs $6.20. And if that stock goes down and down big, that put's going to go up in value. Watch this. Okay, if you have a 63 put, it gives you the right to sell the stock at 63, right? What happens if the stock goes, stock goes all the way down to 40? What's a 63 put? Tell me, what's a 63 put worth when the stock's trading at 40? You have the right to sell the stock at 63. Everybody else in the world can only sell the stock for 40. So if you have the right to sell the stock at 63, could you sell the stock at 63? Yes, you could. And then you could turn around in the open market, buy it back at 40, and what could you make? Plus $23. It's a home run because you only paid $6.20 for it. You guys get it? All right, here's the most important thing in here. Buying the 63 put defines our risk. You can't lose more than $6.20 because that's all you put in, okay? And provides stellar downside capacity, stellar downside capabilities over here. The key, though, over here, the key, I told you. I could tell you all day long, you should short this, and you should short this, and you should short this. But here's the problem. People don't know how to short it. They don't know the right put to buy, okay? And that's the key to strategy. Strategy is like, is he seriously telling me I could just buy a put in lieu of stock? Yes. You're like, but a monkey could have figured that out. Yes. Okay. You could have figured that out. Anybody could have figured that out. You have to know which put to buy because a synthetic ain't going to work if you don't buy the right put. Think about this for a second. Let's actually show it to you. Here we go. This is actually a much more realistic example. By the way, don't freak out on me right now just because I've had a lot of caffeine. All right. Don't freak out on me when you see this screenshot. This screenshot happens to be the Thinkorswim platform. And the reason I'm using this screenshot is because I just want you to see, well, in real context, okay, this is the XLP. Again, it's the Consumer Staples ETF. It's trading right here, 57.43. Okay, so I am buying the 63 put. And by the way, here's the real market on it. I said I paid $6.20. I paid less than that for this put. And by the way, I own the put. Risk is limited to the debit paid for the put and provides us nearly dollar for dollar movement, okay, if the XLP sells off. Okay, that's where we're at. So what do I have to have the XLP do now? Okay, I need it to go down. What happens if it doesn't go down? What happens if it goes up? Okay, I can lose. How about that? I can lose. Well, let me actually show you though, using a put in place of short shares. Okay, why we use a put in place of short shares? Buying the put option is nearly the equivalent of being short the stock. Right? Okay. How much margin does that tie up? Because I actually bulleted this off and I was thinking about this and I'm like, I should probably show this. How much margin? Well, it's a buying power reduction. Okay. And when I say a buying power reduction, in this particular case, it would tie up $6.20. If you did one contract, it's $620. Okay. Everybody in here can actually do this. Everybody in here could do this. $620. It can be done in a retirement account. You're like, can I trade options in a retirement account? Of course you can. You can at TD Ameritrade. You can at E-Trade. Okay. You can at Charles Schwab, which is about to buy TD Ameritrade. It's a disaster out there in the brokerage business, but everybody lets you do this now. This limits risk and upside exposure. What does it limit our risk to? 620. Put buyers don't pay dividends. So if there's a dividend payable in here, it doesn't matter. That's your risk. And let's ice this cake. The put can be held for an indefinite period of time. You can use what's called a roll. Roll me out, baby. What that basically means is you can actually pick the trade up and move it from one expiration to another. One expiration to another. Now, it's not imperative, again, that you understand what a roll is. Okay, let's not get caught in the context of this. For those of you that are a little bit more experienced, I told you. Okay, you're going to pick some stuff up in here and you're like, oh, that is actually kind of interesting. So I can actually hold a short position in a stock without actually shorting the stock, and I can hold that short position indefinitely. Are we having fun yet? Okay. Are we having fun yet? Anybody? And by the way, I'm telling you right now, it's going to be imperative to do this. This is like, people think of investments. It's an investment to the downside, right? There's nothing wrong with that. Somebody says, what do you mean it's an investment to the downside? Well, why do you buy gold? I want to know, why do you buy gold? It's a fair question. Oh, look at this. Nobody's chatting in right now. Okay. Okay. I mean, I want to buy gold. Why do you buy gold? You go, because I think the world might come to an end. So you're buying gold because you're trying to protect your beep from getting crushed if the marketplace tanks. So why not just take an investment to the downside, right? Because you could do this again. You're going to have to understand long short. I mean, this is what tactical asset allocators do. This is what your money managers are supposed to do. But the most of the money managers, they just go out there and they go, well, what did you do? You go, I bought the spider. You go, seriously? I'm paying you 1% a year, okay? Because you bought the spider. You go, yeah, I did it. I bought it. I bought the spider. I mean, it's unbelievable. By the way, a little bit of background on me. So if I sound like I have a little, I'm a little edgy about like the professional trading world, because most people that are quote unquote money managers, they don't know what they're doing. Okay, they have no clue what they're doing. Their entire business revolves around bringing assets in, that's your money, under their management. Okay, why do I say that? Because for a while, I ran and built TD Ameritrade, not Thinkorswim, TD Ameritrade in 2010, tasked me with starting, registered investment advisors trading options, because registered investment advisors don't know anything about this. So they tasked me, start an education division at TD Ameritrade. And I got to go fly around the country and around the world for that matter. In fact, I even opened an office in Singapore during this time. We taught registered investment advisors about options, ones that had $300 million or more under management. And I got to tell you, that's where this entire presentation initiated from. Because these people would just go out there and like, well, you just saw 2008 happen. What are you doing now? And they go, well, we go out and we buy stuff and then we sit there and we hope nothing bad happens. You go, oh, holy crap. Like you would sit across the table from people that had literally $5 billion under management. What's your strategy? I go, we buy a bunch of stuff and then we hope it doesn't go down. I'm like, oh, this is good. There has to be more than that. Especially in this marketplace. And I think you guys kind of get that. All right. That's why I'm showing you this now. You know, basically how to create, the synthetic short. Now, I am going to ice the cake, and I'm going to sell some options premium against our short position. So for those of you that speak geek, I'm doing a reverse covered call. All right, you're like, well, what do you mean? Okay, I'm going to sell premium against your shorts. That's a phrase you don't hear too often. What are you doing? I am selling premium against my shorts. Okay, shorts. Listen, I bought the June XLP 63 puts. By the way, I really did buy the June 63. I mean, I own these XLP puts right now. Can I sell a short dated May 1st expiration, the 55.50 put, against the put that I bought? Now, this is where a little bit of geekism comes in here. Now, remember, okay, a moment ago, we went out there, okay, and we bought what? Okay, this pen, okay, what's this pen trying to prove? We went out there and we buy, okay, these puts over here, puts, and we paid $6.20 for them. So we buy puts and we paid $6.20 for them. What I'm going to do is, those are June puts. Okay, I'm going to sell a May 1st expiration 55.50 put. Okay, and I'm going to sell it for $1. By the way, I selected this one because it was $1, and that's on, you collect $1 in 17 days time. So how many 17-day periods might fit into this? We could say like 3 or 4. Do you realize? Okay, do you realize you could actually sell a put, sell a put, sell a put, sell a put? Okay, you could collect back about $4 of the $6. That's with the XLP not moving at all. But I guarantee you something, the XLP is going to move. So what I'm doing in here is I'm actually selling options against the option I own. Yes? Okay. All right. So what does this break down to? Remember, we own the June puts. Then I'm actually selling this little monkey right there. Okay. How do you sell it? You go, you never owned it. Listen, when I buy a put, it's kind of weird talking about puts, right? Because if you're new to this, you're like, wait a second. So what does a put do? Okay. Well, we own the June 63 puts. The June 63 puts give me the right to sell the stock at what? 63. Okay. So I have the right to sell the stock at 63. But then I'm simultaneously, okay, that means at the same time, I'm simultaneously selling, okay, a shorter dated, this is it's a May 1st expiration, okay? I'm selling short duration stuff against it. And I'm collecting $1. You go, how do you do that? Well, here, okay, I have the right to sell stock at 63. Here, somebody has the right to force me, okay, to do what? Well, I'm selling somebody the right to sell me shares at 55.50. You go, but what if that happens? Okay, what if they force you to take the stock at 55.50? Well, then I still have the right to do what? To sell somebody else the stock at 63. You'd still make a ton of money in here, right? Okay, and you'd collect $1 for this. Why not? Okay, everybody should be doing this. Everybody should be doing this. I'm selling shorter dated options against my longer dated options. That's it. Sell a shorter dated put against the put. Okay, buy a put, sell a put, buy a put, sell a put. I'm actually spreading off my risk, and I'm able to do it time and time and time again. Because again, the option I'm selling is only good for 18 days. There's a lot of 18-day periods packed in between now and the June expiration, right? There's about almost 4 of them, almost 4 different periods. So you can collect almost $4 against the puts that I only paid $6 for in the first place. Now, okay, Skew, love it or leave it. Listen, there's actually distinct advantages of creating this short position. There are distinct advantages of creating short positions, okay? And this is actually an area that I think that this one kind of ices the cake, but your head's going to explode if you're newer to options. It's okay. Is it okay that everybody's head's going to explode over here? Okay? There's distinct advantages of being short. The options marketplace favors the sale of put options in what is termed skew. Okay? In effect, you collect more options premium for selling put options. Okay? Now, I'm actually going to show you something, and hopefully you find this kind of interesting. Skew is helpful for people that are carrying short positions. And you're like, I don't get it. You're about to. Okay, what we're doing over here is we're looking at an option chain. Okay. Once again, every time I bring up this platform, don't panic. This is still the XLP. Okay. And it's the exact same option chain. It's the May option chain, right? All I wanted to do is show you this. Okay. I just wanted to show you equidistant. This is like 55. Okay. Over here are puts. Okay. And everything on this side of the screen is calls. Puts, calls. What would you rather sell? Okay. Out of the money puts. Okay. Trading for about 90 cents, right? That's about 90 cents. Or the equidistant out of the money calls trading for 45 cents. Now, let me ask you something. Almost everybody in here has heard of covered calls. Have we not? What's a covered call? Covered call. I buy the stock and then I sell a call against the stock. There's nothing wrong with it. It actually collects a lot of premium. Okay. But the funny thing is, okay, when you buy the stock and then you sell calls, the calls in this case are going for what? Like 45 cents. You realize if you were short the stock and selling puts, the puts are literally trading for what? Double, especially in a more volatile marketplace. The puts are trading for double, okay? And they're equidistant. When I say equidistant, look where the stock is. Wait, let me blank this out for a second. People, look where that stock is. That stock is right smack on 57.50. The 55 puts are 250 out of the money. The 60 puts are 250 out of the money. 250 out of the money, 250 out of the money. Why are the puts trading for double the calls? Because the demand for the puts. People want the puts. People need the puts. People love the puts. The implied volatility of the puts is substantially higher than the calls. Therefore, it actually makes tactical sense, especially in a more volatile marketplace, to actually carry some short positions because you're going to collect more option premium. Okay, with that, right? I know. Breathe. Selling premium against our puts. Selling short-dated options against our longer-dated puts. It brings in, okay, it doesn't, you know what? I did one for like 17 or 18 days out, but you could actually do this weekly. You could actually bring in a weekly income stream on here, okay? It actually lowers the cost basis into the put we purchased, right? Because if I collect $1 and I paid $6.20 for that little thing, all of a sudden I'm just chipping away at that $6.20 and chipping away at that $6.20, okay? Via bringing in weekly premium, we can profit if the stock were to stay flat, range bound. You know, the stock could technically even move a little bit against you, and bringing in, okay, dollar after dollar after dollar will really start to pay off. By the way, this takes substantially less risk than shorting stock. And selling puts places the option skew in our favor, as we just showed you a moment ago. Okay, there's a lot of attributes to doing this. I mean, listen, how to collect income being short. I think the idea is pretty straightforward. It's easy, right? We want to achieve maximum reward for minimal upfront risk and be capable of selling options premium. I mean, this one, you got to scream it out. Limit your exposure and maximize your premium selling potential. That's what it's designed for. This is actually a risk graph. It's huge potential, minimal risks. By the way, this is a risk graph of just the XLP position. This is just buying the put. This is, again, when I say the risk graph, a moment ago we showed you that you had $6.20 at risk. Well, that's what this is. It's $6.20 at risk, and you know, it's got, I mean, you know, I was talking about like what if we went from this, here it is, 57 and change, and we went all the way down to what? 40. That's $40 right there. Okay? You're making about $1,900. So in this case, call it $620, okay, to be able to make $1,900. Is that move possible and plausible? Yeah, because it was just there like 3 weeks ago. I just wanted to point that out. That's actually one of the reasons. And again, I was in a short position in XLP, and then I just reshorted it. Okay, I covered and then I reshorted it. So let me ask you this: what other stocks might be suitable shorts? Suitable shorts. Okay, Microsoft. Ooh, boy, this is one. Okay, maybe I'm wrong, maybe I'm not, but it doesn't matter because I'm going to tell you right now, I'm going to define my risk. Microsoft has remained unscathed in the current environment. Tech stocks appear to be impervious to volatility. Did you guys know that Amazon today hit an all-time high? It did. Okay, so let me ask this. What could cause technology stocks to dive right now? You tell me. I want to get you thinking here for a second. You know, don't make this about me. I just want to know. Technology. It's impervious to volatility. But you also have to realize that in every volatility, they always go after tech. So what could cause technology stocks to dive, right? Anybody? So what can cause it? All right. Some margin calls over here. Government regulation. I like it. Okay. Supply chain holdups, bad earnings. I have a really interesting one. I have an interesting one, and I'm going to give you my thought process on this. Okay. Microsoft is up 42%. And by the way, I'm telling you again and again, what I'm giving you here today, I'll give you candidate after candidate after candidate. What you have to learn is the right options to short this with. Okay. All the context behind it. I'll tell you what, Microsoft's up 42% in the last year. And it's remained, as I like to use this term, unscathed. It's untouched in the recent volatility. I mean, yeah, come on. It was up here and it fell flat on its face. But by the way, okay, over the last year, forget about year to date. I hate year to date. You know, people use, well, year to date, it's down. Okay, yeah, but like I like to look at year over year, like year over year. You realize Microsoft is still up 42%. Okay, and that the recent like sell-off right here, this is where we're currently at right now. That only takes us back to where, like, whoa. So Microsoft is worth basically what it was in February. How much did you lose on Microsoft? A few bucks. It's like nothing, right? So it's been rather unscathed. Okay, so why am I picking on Microsoft? I'm actually going to give you a good reason. I think a lot of people realize that there's the jobless numbers out there are high. They're going to be really high. Okay, what are people going to do over the next couple of months? They're going to get a couple of bucks from the government. They're going to get their, $1,500 in the mail. You have a couple of kids. You're probably making up kids' names. You're like, come here, little Johnny, you belong to me. I get an extra $500 for you. It's ridiculous. People are going to start cashing in on their 401ks and their IRAs. What do you think Microsoft is? Okay. Why is it susceptible? Because it's the biggest of them all. It's the number one holding. Okay. This is the components of the S&P 500. I'm telling you, finding candidates is the easy part of this. Microsoft happens to be the number one component in the S&P 500 in terms of weight. What that basically means, okay, is that if anybody owns S&P 500, you have a mutual fund, a Vanguard 500, you have a Spider, okay, they're going to be selling Microsoft. Why? They have to sell Microsoft if people start unloading their positions. Right? And selling some Apple too, but Microsoft is prime, okay? Because you've seen Apple come off. Amazon, though, that Amazon is interesting because that's actually what's been leading the rally right now back in this marketplace. Microsoft is prime, okay? Prime in its current form. With that, let me actually show you another one here. This is analysis, okay, of the S&P. I wanted to show you. Did you know that the 15 top companies in the S&P 500 are equivalent to 30% of the S&P 500. So it is possible right now, 15 stocks, okay, sell off, they're equivalent to 30% of the S&P 500. 30% of the S&P 500 is all tacked into 15 top companies over there, okay? And I'll tell you what, one of them just came out today, JP Morgan, one of the biggest, one of the baddest. Okay, you just saw it on the previous screen over here. There's JP Morgan. It's number 9 in the list. Actually, it's really number 8 because Google is actually, it takes up 2 slots in here. It's really 1. So JP Morgan just came out. And again, they said, this is it, people. This is going to be the worst recession he's ever been through in his entire career. This is going to get interesting. Okay, big stocks are going to get hammered over here. 15 companies, 30% of the S&P 500. Okay, question is this, though. How do you go about shorting Microsoft? Because I like to sit here and give you ideas. And what you need to know now, you need to know what options expiration do I select? What should be the delta of the option I buy? What options do I sell against my position? What options do I sell against the position? Okay, and when do I actually unload the position? I doubled that one. Okay, how do I roll my positions? How do I size the position from my IRA or taxable account? By the way, this doesn't have to be done in an IRA, but it can be done in an IRA. Trading, okay, isn't about the selection over here. You could be wrong and you could still come out okay because you're going to sell some premium against, Microsoft. What you have to be deadly accurate, though, is in the selection of the option. Let me actually show you a couple of positions that I've actually done. Here's one in HYG. Is anybody familiar with this? HYG. Okay. What is HYG? Junk! Okay. Well, here's a position, and I want to show you. This is right there. This is copy and pasted down below directly from the TD Ameritrade, the Thinkorswim platform. The inception of the trade was on February 21st, 2020 at 9:30. By the way, okay, at this point I live in Arizona, so we're on Mountain Time and Pacific Time, but at this point of the we were actually on Mountain Time. It gives you the exact same time, everything. I want you to see. I purchased the put for $3.63. That's it. That was my maximum risk, was $3.63. Okay. Now, you could do one contract, you could do 10 contracts. What that means, okay, is you could have as little as $363, okay, of risk in here. But you could also do this, okay, $3,630 worth. It just that depends on you and how much capital, okay? But we can help you in terms of allocation. Now, let me show you the full Monty here. This is everything I did in the position. Okay, this is my trade history, my order history, I should call it. Everything that I did. Okay, you can actually see multiple purchases in here. This is to open. So this is the opening position. This is a roll. 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 These are all one roll, just broken into multiple contracts. Basically, what I did here is I started the position for $3, okay, and 64 cents. I'm averaging, okay. I got into this position with $364, okay. Every $364 I invested, I got back $1,602. It's a 340% return. So, by the way, I'll just show you also, I'll cut to the chase over here. This is the opening of the trade. Right here is the closing. Now, I know you see different contracts. It's just depending upon how I break it up, because I wanted to show you everything. I bailed out of this on March 16th, March 12th, and March 16th. Okay, I got into it on the 21st. I figure the marketplace is going, junk is going. Junk is going, and junk went. Okay, it's rallied back up right now, but that's okay. I'm out, baby. I'm out of the contest. I wanted to show you, though, definitive results. And again, this could be $3,640. To be able to make $16,000 and change. All right, these rolls are important here too. By the way, I want to reiterate something again. Every single position that I did in here is detailed. The HYG is the cleanest example that I have, okay, of this sort of strategy. Now, guys, ready to go a little bit deeper? Because now things are going to get a bit more serious. CSX, okay? CSX. I initiated a short position in CSX, okay? When did I initiate it? Right here, okay? Right there. Did I know something about this market? Absolutely not. I didn't know anything, okay? I did the same thing as junk. I looked at the marketplace. The marketplace, by the way, was already falling, okay, at this date. The marketplace was already falling. So I'm looking for stocks that hadn't fallen yet. Okay. I went to junk. Junk hadn't fallen. And then I'm like, CSX, trains, planes, and automobiles. It's a train. Here's all the trades that I have on CSX. Now, CSX, this gets a little bit more complicated. Again, the learning curve is up there, right? I actually bought the CSX position. Here, it's $10.90. I took in monstrous credits. 1665, 1665, 1665. Look, all of those rolls are really one, okay? But I took in a credit. So I paid, and I want to show you something, okay? I paid $10, okay, and 90 cents for the trade, which comes out to $1,090 invested. Okay, with all the rolls and everything, and my average price out, I got back $3,564. It's a 227% return. This is one of the fastest trades I've ever had, okay, in terms of that kind of P&L on a big boy stock. It is huge, okay? That's CSX. By the way, we could do this all day long. As I said, I like to show you in context, right? I don't care what somebody says. Every trade in here is detailed. Every single trade. Listen, synthetic shorts, it gives you the power to trade massive stocks and index products, which is substantially less risk. You want to see substantially less risk? Okay. Now, this is a trade on Boeing. Oh, I'm going to cut to the chase on Boeing. You're not going to see any P&L in here, and I'm going to tell you exactly why. In Boeing, I held Boeing, okay, and I've been short Boeing for a really long period of time. So this is actually a position that I had on for, when I say an extensive period of time, okay, we're talking literally, okay, over a year that I was inside of the Boeing position. All I'm doing is showing you some of the more recent positions, but I just wanted to show you it's the largest credit I've ever had getting out of a position. I only had 2 contracts on, and I'm showing you. I closed some on March 10th and March 11th. I did not catch the bottom of the marketplace, $147 credit. You realize with one contract, that's $14,780. Okay, that's one contract. I don't mind telling you this. I had 2 contracts on. Okay, that's enough risk for me. So what did I have over here? You can see my average prices on them. For the most part, I had average profitability of close to $14,000 on 2 contracts on there. Okay, which amounted to almost $28,000 of P&L. So Boeing, I'm also showing you all the credits. That was the final conclusion. There was credit after credit after credit after credit on the way down. So that's a Boeing example. Oh, by the way, what our members are saying. This comes from Chris. And this was on March 26th. All right. Don, I've learned more in the past 4 weeks managing and defending my portfolios than I have learned in my entire trading life. Nothing I've learned, okay, would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge took a large sting out of my long-term IRA destruction, okay? You clearly don't have to be a teacher, but thank you for doing so. Stay safe, Chris. Basically, this is one that I like this. It's not about making money. It's about saving his behind, okay? Next trade up over here, this is actually Citi. In Citi, okay, I'll just show you the exit of Citi. The result is Citi tanked, and I had Citi on for also a substantial period of time. The average out price was over $40 per contract. Okay, I mean, Citi is not exactly like a high-flying stock over here. Was able to pull $40 a contract out of this one with a multitude of rolls in between. Okay, by the way, this next one, this is as clean as it gets. I opened a position in Lulu and I closed a position in Lulu. I'm going to say that again. I opened a position in Lulu. Okay, this is actually January 28th. Did I know anything about anything on January 28th? Of course not. Okay, and I closed on March 12th. I opened this thing for $24. I closed it for $116. Okay, every $2,000, okay, $430 invested, I got back $11,665. It's a 380% return. Okay, now I wanted to show you again a couple of examples of trades that I've been in. But as I said a moment ago, I'm going to show you everything that I do. Here's everything I did, okay, on XLP. Now, XLP, this is something I shorted and held for a substantial period of time. Look at this. This is everything from the opening, okay, every single position I did, and then all the closing strategies. So you can see I paid like $7 for this, and I rolled it for a couple of debits, a couple of credits. It was a party along the way. I closed this thing for what? $12, $11, $12. It was huge. That's the XLP. And by the way, that's from inception. The inception date, okay, was September 4th. I rode that thing all the way into March. Okay, were the returns knock out of the park stellar? Not exactly. But I wanted you to see the full Monty. I wanted you to see every single position that I had on. Okay, again, full disclosure. Every single trade that I'm showing you here, okay, was displayed in front of all of the clientele of TheoTrade. Now, next one up. You guys want to see one more? Okay. By the way, somebody said, why are some of them verticals? Some of these are actually verticals because I'm actually rolling, okay, same expiration cycle. I'm actually rolling to the same expiration cycle. It's actually a great question. Next one up, Caterpillar. Okay, I'm going to tell you a little history about Caterpillar. I have had short Caterpillar positions on for quite some time. I covered my Caterpillar here, meaning that I closed the position right there. I have now reinitiated a Caterpillar position. Okay, this one has not been closed. It is a brand new position, current position. This is a current position in CAT. I'm up 44% since inception. When did I open it? Was that recent enough for you? Okay, who cares about what we did in the past? Everything's about moving forward now. I had to pay $2,400 to get invested in this. If I close it right now, okay? If I closed it right now, for the most part, I've got $3,450. They if closed today, but I haven't closed it yet, and I'm not going to close it. Okay, I think Caterpillar is going to be a decent victory. You got to know what you're doing though in these trades. Okay, this is not one like people are like, oh, should I get in this one now? Yeah, I saw a webinar and I'm going to get it. Listen, you missed this one. It's okay. There's a lot more examples that we could take you through. What our members are saying, this is actually from Brian. It's yesterday. Don, wow. Okay, I want to say again, thank you for what you've taught me in the last 2.5 years. Okay, I bought into what you taught about risk twist spreads and duration positions. What we're talking about right now is actually called a duration position, and started to trade options almost a year ago. Okay, I missed out the last market move up. Okay, but at the moment, my IRA is up 14.8% for the year. Okay, what I've invested in TheoTrade has been so worth the money. So thank you from Brian. The reason I brought this one up is that you have to realize that some people are like 14.8%, that's it. He's a good allocator. You realize how much money most people are down right now? I don't want to show you guys ridiculous, oh, he's up 7,000 here. This is real. This is people that have significant amounts of capital. This is literally from yesterday that I took. I actually took this particular email. It's important. The next thing on here, these are duration positions. If you don't have a tremendous amount of time, it's not going to be a big problem. The trades that I showed today, all of them were displayed live at TheoTrade. The trade results were showing they're perfect though for part-timers. Like this strategy in particular is extraordinarily hands-off. But right now, people, you got the time. You got the time right now, okay? Use your time to learn this stuff. But after you get it up and rolling, set it and forget it, okay? Just a fraction of your time, though, is going to be good enough. And again, I go back to a couple of these positions in here. Look, okay, a lot of this is stuff like, oh, okay, I did something on December 19th, and then I didn't do anything until February, and then I didn't do anything until March 5th, and then I closed a bunch of stuff. That's it, okay? This wasn't going to be huge amounts of time. Here are the characteristics of collecting income being short. All right, I think the attributes of this are undeniable. You never have to buy or sell the stock, right? You don't have to buy or sell the stock. Define your risk. Risk is limited to precisely your comfort level. Okay, you never need to use a stop order. By the way, I'm an anti-stopper. Okay, I don't think people should use them. I don't think people should use them because if you're using a stop order, it's poor risk management. Why don't you just go out there and have limited risk to begin with? It's the perfect trade to reduce risk of a stock portfolio. Why? Because it's a short position. If you're long a bunch of stocks, a short position is going to offset. It's going to reduce risk of the stock portfolio. And you don't have to get short the stock. It's an excellent tool, though. Also, for those seeking returns to build a smaller account, you don't have to have a huge amount of capital. I just showed you a position a moment ago on HYG. It had $363 at risk. Listen, building the short positions. Don't let the options part of this presentation intimidate you. Right? The trade below is being done for a $6.20 debit. But, spreads and options, they're like a massive power saw. If you know how to use the power saw right, things are going to be a wonderful world. It's going to be easier, okay? It's going to be quicker. It's going to be faster. It's going to be safer. But if you don't know how to use the power saw, it's going to lop off a couple of fingers. Options are the same thing. They're going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the market. You don't use them correctly, though, you're going to lop off a couple of fingers. That's the key. Okay, to this is knowing the right way to do it. Like, listen, you can handle getting short and collecting income. Maybe you don't know about options. Again, don't let the options portion of this intimidate you. You need the strategies for the foreseeable market future. And that's one of the things, okay? Say what you will, but I'm telling you right now, you're going to have some long short exposure. We can show you how and when to place these strategies in a matter of a couple of hours. What we do here at TheoTrade, we create recipes for every strategy, including getting short and collecting income. You wouldn't bake a cake without a recipe, okay? So why trade without one? Listen, again, what our members are saying. This is actually from Todd. This one, March 27th. Hey, Don, okay? I love this, like the little bulldog. Don't know if you remember me, but I emailed you a few weeks ago and told you my delta was, this is positive, a couple thou or more. That basically means this gentleman, Todd, is wildly bullish. You told me smash it, which is exactly what I said. Okay? I said smash the delta. By the way, I'm telling you guys right now, people email us all the time. And when they email us, we don't sit there, okay, like a baboon and say, well, you could do this. Listen, we're going to tell you straight out, right? There's no hypothetical in here. You trade, okay? I work for a major brokerage firm. I've had every license out there imaginable. You need help? We're here to help you on email. Okay? I told this guy to smash his delta and offset it by using X number of positions. Saved his account. Okay? I just wanted to thank you. For your information, before Theo had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances, okay, would have been a goner without your advice. Okay? You can use this if you want. Well, thank you, Todd, because I am using it. Listen, this is what you need to know to successfully collect income, okay, being short. Listen, what makes a viable short candidate? It's a fair question. I just showed you Microsoft, I showed you XLP, and I did Lululemon. Okay, but what really makes a good short candidate? It's key, isn't it? What volatility should I seek out? What, you want to go get short Tesla? You first, okay? Dead. You don't see me sitting here shorting Tesla, okay? It's a death wish. You can't do it. You just can't do it. You think I can't short Amazon. It won't fit, okay? What options expiration do I select? Should I do a month, 2 months? You just saw some June options. Maybe I should do June. Why not do September? What should be the delta of the option I buy? Some people don't even know what delta is. If you're unfamiliar with options, you got to know what delta is because we're going to tell you exactly what option to buy. We're also going to tell you precisely what options do I sell against my position. You got to know what options to buy against your position, but more importantly, you also have to know what options to sell against your position. Okay, how do I roll my options? I'm a rolling fool. How do you know, okay, when to move from one expiration to another? Somebody was asking about that. They're like, why do you have verticals in there too? Because it's part of the roll. How do I build the trade? What's the right amount of risk for me? If you have an IRA with $200,000, or maybe you're just starting out and you have $3,000 in your account, risk, okay, is not all like a level linear playing field. You got to know how much risk is right for different size accounts. Listen, let me show you what we do here at TheoTrade. We build recipes in trading. And that's something I'm going to just hammer and hammer home constantly. That's what people don't get. It's not about Microsoft. It's not about Lululemon. It's not about the consumer staples. Trading is about answering the what ifs. What might be a good stock candidate ETF for a short position? That part's easy. The difficult part? What's the correct options expiration cycle to buy the put? How much capital do I commit? What strike price options do I sell and how many? Which options do I buy? We have the answers. What we do, again, is we build definitive criteria. We build checklists. Okay? The way that I always describe checklists, if you're going to get into an aircraft, okay, the pilot, does he just hop into the seat and he goes, let's go, turns like an airplane. He's got the little rabbit's foot and turns the key and just like, boom, let's go. Let's just hit the throttle and we're out of here. Now they sit there, okay, and those pilots sit there for at least 25 to 30 minutes, okay, going through the checklist, especially when the pilots are like late. They're like, we got a checklist to go through. They always go through the checklist. That's exactly what we do for each strategy, each unique variable. Variables are everything. When I say variables, what if the stock goes up? What if the stock goes down? What do I do on Microsoft? Because on Microsoft, it's going to differ for Lululemon. It's going to differ from the XLP. It's going to differ from the spiders. Trading, it's about the how, the when, the why, at what price. You got to know all of it. Frankly, it's just the beginning of the variables you're going to face while collecting income being short. It's about variables. Listen, you can read about a few option strategies. You can Google right now, okay? There's going to be 10,000 different pages that come up on Google about different option strategies. Maybe even how to build a spread, or maybe how to build, okay, a synthetic put. What you don't have and what you do need, the recipe for success. That's what we do here at TheoTrade. 20 years of trading experience. I had access to client order flow for 15 years, viewed and studied literally millions of trading accounts. There's a lot of education out there. No one has the pedigree, not even close to what we do here at TheoTrade. And it's important. I'm going to show you this in a minute. TheoTrade is not just about me. It's not about Don Kaufman. Okay. We have 6 other full-time instructors here at TheoTrade. And it's critical you guys know that. Okay. This is just my trading experience. My access to client order flow for 15 years. I viewed and studied literally millions of accounts. I ran education for over 15 years at both Thinkorswim and TD Ameritrade. Okay. That's where criteria comes from, and criteria is your recipe for success, okay? The following strategy, okay, and corresponding criteria requires the utmost attention to detail. We spent literally years fine-tuning the trade setup, the criteria, and when you hit the section, okay, on criteria, you follow the steps to build a trade. We have a full-blown course specifically on this strategy. It's called How to Collect Income Being Short. I happen to be the trade instructor for this, and it's ready. When I say it's ready, the course is ready. It is what we term in the can. It's ready to go because, hey, this is the time, okay, to use this stuff. It is a 3-hour course. The course has the slide deck with it, okay? That slide deck has all of the entry and exit criteria, all the variables in it. It's available immediately for download. Okay, the course is archived 24/7. We also have a full mobile application here at TheoTrade for iOS and Android. The course is $497. Tonight, we do have, okay, a little bit of an incentive for you. I hope that's all right with you. Okay, we have an incentive for those of you that enroll tonight, as we should. Okay, we want people to learn this. Hang with me for a couple of moments because not only are we going to give you an incentive, we're going to give you a couple of bonuses, okay, to this course, How to Collect Income Being Short. Again, the course is ready right now. It's available. You can watch it literally tonight if you've got 3 hours tonight, okay? You can stop it. You can replay it. You can even download it so that you don't even have to be connected to the internet, right? That's what our mobile application does. Here's the course curriculum. How to Collect Income Being Short. This is the workshop curriculum. We tell you how to go to short the market with very little capital so you can collect income from even a small account. How to use options to short so your risk is minuscule compared to shorting stock. Discover how you can create short positions in any retirement account so you're never going to miss the opportunity in the retirement account. How to easily identify the most promising short candidates. That's important, while minimizing risk so you always have edge. Proven strategies used by seasoned traders to sustain short positions while waiting for volatility to strike. Okay, a rarely looked at tool called Skew. Actually, we talked about that today and how you can actually help finance your short positions, okay, by actually selling premium against them. Discover step-by-step criteria for selling the right options so you can eliminate a lot of the guesswork. What the advantages and disadvantages are of selling short-dated or weekly options, okay, and how you can even collect weekly income. Discover the benefits and risks, okay, of using inverse ETFs. People always ask me about those, okay, and synthetic short puts. Position for IRA or retirement accounts. How to determine position size. A big portion of this class, as crazy as it sounds, has a lot on position sizing here, okay? And at last, learn how to roll these positions so you can sustain the position without having to sit in front of the computer, okay? And listen, every one of you, I talk about like if you have another job, but every one of you right now, you're at home. There could not be a better time to learn this. There just couldn't be because you pretty much, what do you got, okay? Well, I'll tell you right now what you got. You got at least, at minimum, the next 2 to 3 weeks at home. Okay, probably more than that. With that, as I alluded to a moment ago, you want a bonus. And listen, I make this really simple. Okay, I've been around the markets, obviously at the brokerage firm for 15 years. Before that, I traded in Chicago. But in the 15 years at both Thinkorswim and TD Ameritrade, I have seen everything. Okay, all these different educational firms. And like, listen, I know the gauntlet. Okay, I have a question for you guys. How many of you tonight have ever gone out and taken some class somewhere? I think it's a fair question, right? Okay. By the way, we're going to be, somebody was asking how much longer. Another few minutes. That's it. Hope you don't mind them. I'm running a little over tonight. I'm well caffeinated. I'm good for it, people. I mean, people that go out there, okay, and they take a couple of classes here. So you take a class, and then somebody turns around and they say, well, you took the class, but now you have to buy the indicator, okay? And after you buy the indicator, you have to take a class about the indicator to learn to actually use the indicator so you can take another class. Listen, we get it. We totally get it. TheoTrade is designed to go beyond one class or one indicator. Like, we get that people want everything to trade, everything to invest. You want it at one place, you want it at one price. And that's exactly what we do here. Okay. Here's the first bonus that we give you tonight for enrolling. Bonus number 1, we give you access to our entire library. There's 88 trading classes. Now I'm going to reiterate this. I am not the only instructor here. I didn't do all 88 classes. Okay. We give this to you tonight. Why? Because, I mean, listen, you need this. Right? What do you think you're going to do? You're going to go out and take one class. Okay, you're going to take one class. You're like, yeah, that's it. I understand this business. I am the smartest person alive. Okay, forget that. Okay, we're going to give you access to all of our courses. All right, everything available immediately on demand. Okay, we give it to you. How to Collect Income Being Short. It's a $497 class. We're giving that to you tonight. Guide to Surviving and Thriving in Extreme Volatility. We just did that class, 3 weeks ago. We're giving it to you. Guide to Small Account Growth with In-Out Spreads. Okay? Black Book Spreads, $497 class. The Next Big Short. This is the Risk Twist Spread. This one's huge. Huge. $497 class. Okay? We'll give you the High Probability, spreads class. All right? That's Selling Premium. We'll give you the Iron Condor class. Selling Premium, Minimizing Risk, Day Trading NASDAQ Futures, Covered Calls, Essential Skills for Consistency in Trading, Top 10 Skills for Growing a Small Account, Pairs Trading. People, I'm just, scraping the surface. There's 88 classes in every genre of trading you could possibly imagine. We intentionally hire instructors, that are unique from maybe my skill set. It's access to over $9,000 in classes alone. There's nothing that you could pay for anywhere in this industry at any amount. I don't care if somebody goes, I paid, $50,000 to go to some mentor. It doesn't matter. There's more at TheoTrade than anybody offers at any price. Okay. By the way, the instructors for TheoTrade, here they are. Jeff Bierman, analyst, trader, and he's also the former chief market technician for TD Ameritrade. If you've ever been on Thinkorswim charts, you owe a debt of gratitude to Jeff Bierman because he actually helped build over half the studies on the Thinkorswim charts. Jeff's also a professor of finance, an actual professor of finance at Loyola in Chicago. Next on the list, Matt Williamson, our market neutral premium selling option strategist. Corey Rosenblum, he's our senior strategist and resident swing trader. If you're looking for shorter term, as I said, everybody has a slightly different genre. Okay, and it kind of adheres to an individual. Next on the list, we have Brandon Chapman. Brandon also worked with Jeff Bierman and myself, at TD Ameritrade. He's a CMT, macroeconomics, technicals, and fundamentals. I'll tell you real briefly about Brandon Chapman. He actually wrote, the education book for TD Ameritrade. There was a course at TD Ameritrade, that took 24 months of your life, and that course was over $24,000. Brandon actually wrote the course manual. What we have here, I'm telling you right now, a lot of you probably took that course. What we have here at TheoTrade, absolutely smokes what they did at TD Ameritrade in terms of education. You're like, how could you be so sure? Oh, I have a reason. I ran the education group at TD Ameritrade. Brandon actually worked in the group and actually wrote the course manual. So I'm telling you, there's nothing like what we have here. Steve Slim Miller, 43-year veteran, stock options and futures trader. Steve Miller, I've known since I'm a kid. The guy's unbelievable. This guy's forgotten more about trading than most of us will ever know. He's also incredible in the psychology, of which we do. Tony Rago, NASDAQ futures intraday strategist. You want to sit there and trade all day? Tony Rago's your guy. Literally will sit there and trade with you all day. Listen, I cannot stress enough. The opportunity to get short and collect income, it is now. It is right now. You never had a better time, to learn this stuff. So again, the first bonus, access to our entire library of courses. The second bonus, we'll give you a full-blown VIP membership pass to TheoTrade. It's free. We're going to give you 3 months access. It's 3 months access, to what? To everything. You have 3 months, unlimited access to TheoStream. We have a live trading chat room. We broadcast for 6 hours per day. I know that people can't watch 6 hours per day every single day. I get it. Everything is recorded. But you also have access to the classes. But if you want to trade with us live, as I said a moment ago, everything I do is in front of live. How many people are in there? Right now, we're approaching 5,000 individuals, that have access to that chat room. The traders, that's us, the instructors, we provide real trade ideas, real-time market insights and analysis. We use text and push notifications, for trade ideas, including in-out spreads. We do duration spreads. We have 5 different portfolios. We have daily coaching sessions with timely topics. So we don't just let's talk trading all day. We do coaching sessions too. Those coaching sessions, like today, Jeff Bierman was talking about the MACD. The other day, we actually had a coaching session, Fibonacci's. Right? Instructors, we also directly answer your trading questions via email. That unto itself, we say access to $997 of support, trades, and insight. You realize you can email me anytime you want. We will get back to you within 24 hours. It can't be like, where's 5 minutes to go to the close? I'm going to explode. Listen, there's almost 5,000. There's almost 5,000 clientele over here. You got to give us 24 hours. I don't care if it takes me 5 or 6 hours. I actually enjoy answering emails. Especially when I'm sequestered to my home here with 3 young children. Email is my only salvation. I'll tell you what, just the email access is worth $1,000. You get email access to us for the next 3 months. Let's actually ice the cake over here. In addition to this, we give you access to 59 proprietary indicators and scans. We'll give you auto expected move, we'll give you gravity points, RSI Laguerre, the Quantix, NQ levels, next generation squeeze indicator, complex position tracker, IV rank versus percentile, the quant setup, unusual put options activity. It goes on. By the way, the SPX expected move, I'm going to give you that here in just a second. I promised I would give you that here at the end of the presentation. It's access to over $1,800 in indicators and scans. Remember a moment ago, I was poking some fun. Okay, I said, people go out there and they're like, well, you have to pay for this and you got to pay for that. You got to pay for that. We give it to you. All of it. Okay. Why? It's the only way to learn this business. It is the only way to learn this business. You got to get what I call the full Monty. I mean, listen, TheoTrade, it includes everything you need to invest in trade. We give you classes, right? What else? Coaching sessions, continuing education, email access to the instructors, a live trading chat room and live trades. That goes for 6 hours a day minimum. Indicators and scans, and we give you mobile access 24/7. So if you can't catch us live, you catch us on mobile, okay, replay it. It's everything you're going to need. Everything you're going to need. And every genre of trading. I mean, what we try to create here, TheoTrade is the Netflix for traders. Okay, name a topic, name any topic you can dream of in trading, and I bet you that we have an archive on it. You realize we've been around now for enough years, okay? Every day and every moment, every second of TheoTrade has been recorded. You can go back, you can search archives, all of it. 3 months, it's $297. Now, I want to make something really abundantly clear before I go any further here, because I know there's a ton of questions. I can already see the questions actually pouring in right now, okay? So just hang with me for a second. All of this tonight, okay? We give you 3 months access for $297. This is not an introductory price. I hate that stuff here. It's $297. What happens to you after 3 months? Anything you want. This is not a membership. It is a one-time $297 payment. We don't do membership anymore. Why? People freak out. They don't want to, it's going to charge me again. It's a one-time charge. It's $297. Somebody says, what happens after 3 months? After 3 months, if you want to do it again, do it again. What's it going to cost you? $297. By the way, if you don't love us after 3 months, what's it going to cost you? Nothing. You don't have to do it again. But I want you to realize that what we do here at TheoTrade, I'm telling you, whether it's $297 or whether it was $2,970, okay, it's worth it. There's nothing at any price that's going to be comparable to what you're going to see here. This, how to collect income being short, it's included. We give you access to all 88 classes. We give you new monthly classes. I didn't even mention that. We give you a new class once a month. We give you a live trading chat room. 6 hours per day we broadcast. We give you indicators and scans. 59 proprietary indicators and scans. There's text and push notification trade ideas and 5 distinct portfolios. There's daily coaching sessions, timely topics, stocks, options, futures, any genre of trade. And the instructors directly answer your trading questions via email. If you go to this site right now, and this is important, okay, go to the site right now because I'm actually going to show you something on here. It's theotrade.com/collect, okay? That's C, okay? C as in Charlie. O, okay? LLE as in Echo. C as in Charlie. T as in Tom. So theotrade.com/collect. Go there now, and I'm actually going to show you something while we're actually headed over to that site. I'll give everybody a moment to get there. We're actually going to top this off. And hey, listen, frankly, okay, $297 just to be able to email us a couple of times. I bet you anything will save you more than $297 in this marketplace. This is a volatile marketplace. You need help in there. We're going to give it to you. We'll top it off with TheoTrade. We'll make it a completely riskless trade tonight. Listen, everything you need to start is here at TheoTrade, from absolute novice to expert. In fact, in a moment, I'm also going to show you, okay, and I'm going to pop this up here right now just so you can see it, okay? There's an entire area in TheoTrade called Start Here. You know what Start Here happens to be? Okay, Start Here, it's for the absolute novice, okay? As I said, this is from the novice to the extreme. But I want to reiterate something here. We're going to make it a completely riskless trade. We'll put a money-back guarantee on it, okay? That's this. You trade with us over the next 3 months. If you're not satisfied, by the way, we're not putting a word like to satisfied. What's satisfied? Love us? Okay, that's fine. But if you're not satisfied, email support@theotrade.com. Provide us the details of your trades and receive a full refund. Listen, I'll give you the stipulations in a second. This is a whopping $297. Okay. Listen, if you're not happy, we'll give you 297 bucks back. Okay. I don't want to split hairs over it. I just don't want to split hairs. There are stipulations for it. You have to do 10 trades. You have to do 10 trades in the next 3 months. I'm going to do more than 10 trades in the chat room. You can follow our trades in the chat room. That's fine. Do 10 trades in the next 3 months. Your initial account value has to be $2,000. You must follow our criteria. You can't make your own crap up. Be like, yeah, one time I saw this on CNBC. No, you have to actually follow our criteria. I think that these stipulations are more than fair. Oh, yeah, and the money has to be real. You actually have to have real trades. They say paper trading, people. All I'm doing is saying, hey, if you're willing to try for the next 3 months and trade a couple times with us, okay, if you're not satisfied, we'll give you $297 back. And again, satisfied is wide open for interpretation. I don't want to split hairs over it. I really don't, okay? If you don't love us, we get it. We have just shy right now of 5,000 people on TheoTrade, and there's a reason for it. Okay, because we're not here, to do anything but to support you in every way, shape, or form. Listen, get into TheoTrade now. We're going to work with you directly. That means email us back and forth. There are 30 spots tonight, and only 30 spots on the riskless deal. The reason we limit to 30 spots, okay, we have to go back and review trades of people that want us to. They go back and review trades. There could be a lot of people. It's a matter of trade size. It's unlimited email mentoring. Send us your trades. There is the first 30 people tonight are offered the riskless trade deal. That's it. The $297 on this class has never been offered before. Okay. And we do this again. Listen, we want everybody, okay, to be with us on TheoTrade. The first 30 people, though, get a completely riskless, it's a risk-free trade for you for the first 30 people that enroll tonight. What our members are saying, thanks, Don. Just finished my first ever quarterly trading report. Gross 21% return on investment. Thanks for all the help. Looking forward to your intraday course tomorrow morning. Fantastic service. I became self-directed trading when I got the education here. Just wanted to let Don to know how much I appreciate him and what he does for us. The first time ever, my account's in the green. Listen, this is everything tonight. TheoTrade access, okay, you get today for $297. Obviously, you get how to collect income being short. You get 3 months full access. The trading chat room, the push notifications, archive 24/7, indicators and scans. The second bonus, it's access to our full library. Again, the full library of every course we've done. There's day trading and swing trading and technical trading and beginner's options trading and advanced options trading. I'm actually going to show you some of the classes. Follow me right now to this, okay? It's theotrade.com/collect. Again, it's Charlie, okay? OLL, Echo, Charlie, Tom. TheoTrade.com/collect. Okay. And the reason I'm going to take you there is because follow me to the link for the SPX expected move indicator. And I'm actually going to pull this link back up right now. Let me also pop the web address up here for those of you that may need it. There it is again, TheoTrade.com/collect. By the way, right up here, okay, right up here, that's support at TheoTrade.com. This is also our phone number here, but you can actually come right down here. I just wanted to show this to you real briefly. Okay, let me delete that out. Come right here and you can actually, if you want help, we're live right now. Just come in here, chat, put your name, put your email. You can actually chat, okay, directly with us. Listen, okay, for those of you enrolling right now, just click add to cart. After you click add to cart, it's actually going to populate a separate page for you. I just want you to be comfortable with this, okay? It is a one-time $297, okay? It's a one-time $297 charge. That's it, okay? The payment information on here, okay? So I wanted everybody to be comfortable with that because it actually details precisely, okay, what you're actually purchasing on here, and that is a one-time $297 charge, okay? On this page, and I'll reiterate this again, it's theotrade.com/collect. On the page, if you scroll down towards the bottom of the page, okay, it says SPX expected move indicator for Thinkorswim. Click on it. That is your free download. I want everybody to click on it, okay? Those of you that are enrolling right now for TheoTrade will actually update it. Okay, we'll give you constant, where there's so many indicators in here. You don't have to worry about it right now. You just click add to cart. We'll get you all the different indicators and set up with those indicators in no time. Again, it's 3 months access. All right, So I'm actually going to show you a couple of things, and then I'm going to answer some questions in here. I'm actually going to take you into TheoTrade for a second. When I say I'm taking you into TheoTrade, a moment ago I showed you start here. If you're an absolute novice, options 101, options 201, options 301, order execution. Everybody needs order execution. Okay, options 301, probability, risk, and price. Okay, everything. Okay, we leave breadcrumbs. We actually show you, okay, methodically. There are courses set up in here. So that's start here. Okay, from there, people go, what does TheoTrade even look like? This is where we broadcast day to day. When I say broadcast, right in here, okay, this goes live and you can actually see my screen. You don't have to look at my face. You see my screen. This is the chat room. Okay, in the chat room down below over here, this is just clientele talking to clientele. Okay, it gets crazy in there. So, it's almost 5,000 people in there. From there, okay, this is the member home. When I say member home, what can you do in here? We built like a Google type search engine. Type in anything you can dream of. Okay, I like in-out spreads. So if I want to know like what's in-out spreads, okay, and what do you have on TheoTrade for in-out spreads? So we can click search. Every search result for in-out spreads will then populate coaching session. The in-out spread Q&A, okay? Ins and outs of in-out spreads. It just goes on and on, okay? Of all the different, again, genres of trade. You can type in any search topic that you want. You want to type in MACD and Bollinger Bands and Fibonacci's and, it goes on and on, okay? In terms of classes, there were 88 different classes. The classes are broken down: option strategies, option newbies, technical analysis, day trading, futures, stock, trend trading, mindset. This is psychology, pairs trading, hedging strategies. This is what the option strategies classes look like. So you want an idea what you're getting access to for $297, okay? It's going to be jaw-dropping. Here's all the different classes. How to collect income being short, okay? Consistent, small account growth formula, fruit fly for consistent income, selling options for a living, okay? Guide to maximum edge trading earnings. Straddles class. It goes on and on. Black book spreads. How about this? Guide to surviving and thriving extreme volatility. I think that one's kind of important right now. Okay. That's what the class archive looks like. All right. So you've got everything from the member home, okay, to what? Searchable archives, to the classes, to start here. All right. Again, enroll right now, and I'm going to answer some questions over here. Enroll right now. I'll put up that address. It's theotrade.com/collect. I'll remind you again, it is a completely riskless trade. So again, I'll throw up the address over there. All right, what our members are saying. Hey, by the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together, sharing your knowledge, and not upselling everything and turning and burning your customer base. You've got a customer in me for life because of this approach, and I'm sure I'm not the only one. By the way, I love that one because basically that's our motto over here. All right. This next one actually comes, says, Don's the most knowledgeable person I've ever heard in my 50 years of stock investing, and I've listened to many. His knowledge of how the markets work is like sitting next to a finance PhD. I highly recommend learning what this man has to say. This is actually coming from Facebook. So with that, I'm going to answer a few questions. Again, go to theotrade.com/collect. I know I've gone over in time, but I'm going to get a few general questions out of the way, and then we're actually going to get to the the finite questions in here. People always ask us, what do you need? What do you need to get started? Okay. Well, again, first of all, you need the link on here. So this is on the top and the bottom, but that is fine. You need a laptop, internet connection. I'll tell you what, right now you can get away with an iPad too. You want to use an iPad? Use an iPad. That's fine. Okay. We have everything you're going to need to get started. Okay, from novice investor. If you don't know which brokerage firm to go to, we have a couple of different brokerage firms who work through everything. Second question, I want to reiterate, this is not a membership. You are not going to be auto-renewed or billed again. And I always reiterate that because everybody freaks out. They're like, am I going to get billed again? You're not going to get billed again. Okay, that's not the way that we operate. That's not the way we want to operate. It's really important to us that you know that. Okay, number 3 over here, people say, well, I can't watch during the day. Well, right now you can. You can watch during the day because you're not going anyplace. But we archive everything. We understand that everybody can watch everything live. By the way, not only do we archive stuff, but number 4 over here, we have TheoTrade Mobile. And on the mobile application, here's a fun one. On the mobile application, you can actually play it back at like 3 and 4 times the speed. So yeah, how about that? 3 and 4 times the speed. Yeah, it kind of does it for me. I like that because I already speak really fast, so it sounds like a chipmunk. It's good stuff. Number 5, you can email us at any time. And I reiterate this, I put huge weight into the email because throughout my entire career, I've always emailed back and forth with clientele, whether I was at, Thinkorswim, TD Ameritrade, here at TheoTrade. It doesn't matter if, myself and another gentleman are running the firm day to day. I set aside 3 to 4 hours every single day for emails. And, people were shooting me emails on Easter Sunday. It's okay. Okay. I set aside time every single day. That's like dawn quiet time. Email us. It's not just me answering the questions. Okay. We have an entire group, but everybody that answers those emails, they're all traders. Like, we don't have any monkeys that work at TheoTrade that don't trade. So it's important to us. All right. Number 6, you're going to gain access to every course we've done in the previous 4 years, classes, coaching, archives. Everything is searchable, as I said. I mean, we give you, again, kind of the full Monty out there. Number 7, all trades that we've discussed can be done inside of an IRA. In fact, all the screenshots that you saw of my account, that was my IRA. Okay, that was my IRA. I like to use my IRA because I know a lot of you are trading in your IRA. And all of the trades can be done with as little as $2,000 within the account. Okay. We at TheoTrade can also help you get approved for options trading. Okay. We have links to everywhere. TD Ameritrade, obviously, I work there. Okay. We have links to Charles Schwab. One of the guys that worked for me now runs education at Charles Schwab. Okay. One of my best friends, she actually runs part of E-Trade. Okay. I know people at Interactive Brokers. If you're in Canada, we know people obviously in Canada. Okay. This is a small world. Realize that. So, okay. It's important that you know that we have access to the brokers. We know all the brokers. If you need help, we can help you. Remember, there are 30 riskless trade spots available. Get results. Okay. I want everybody to obviously hop into TheoTrade because, again, we're going to be here to support you guys as much as you possibly need. With that, again, I'm going to pop in here and I'm going to answer some general questions now from the chat room. I'll pull this page back up. Again, this is kind of the enrollment page over here. It's theotrade.com/collect. All right, let me answer. Okay, let me answer some generalized questions. Somebody, the first question that came in here said, what about shorting indices like the diamond? And that came from Cliff. Okay. Actually, it's not a bad idea. The diamond, though, that's the diamonds of the Dow. The liquidity in there is not actually that great. So we'll give you some better ideas. Right now, though, in this volatility, you actually want to be a little bit, sector specific. Okay. Has been working very, very well because sectors are leading edge. Okay. Above and beyond. You're getting better returns out of the sectors than you are of the major indices. All right. I love this from Leslie. We all realize long-term fiscal damage. So again, why is the market going up? That's the ultimate question, isn't it? Okay. Right now, there are enough traders that actually believe that the marketplace is going to go down. By shorting, we actually cause the markets to go up. That's one synopsis. I don't really believe that. What I believe is quite simply this. People believe what the Fed is going to do right now. Okay, they're your savior. They really do firmly believe that. But the Fed, the Fed themselves, if you listen to a little program, it's about a 6-minute interview from a guy named Neil Kashkari, who actually he's the president of the Minneapolis Fed. I'll just cut to the chase and tell you, this is exactly what he said. 18 months in a recovery. It's going to be the toughest recovery. It's going to take 18 months. We expect more future lockdowns. Okay, the Fed right now is using shock and awe, and for the most part, it ain't over. It ain't over by a long shot, and that actually comes directly from the Fed. By the way, I like this one. Do you think we'll try to get concessions from China to help out the Fed? Carmine, no chance. I don't think they got the guts to you want to see how weird the world is right now? Do you want to see how weird the world is? Okay, the U.S. just brokered a deal for OPEC. Do you realize that wars have been started over at OPEC? Literally wars. I'm not being fictitious here. Wars have been started over OPEC. Now we're brokering deals. Okay. We are so far off the rails. Okay. We can't even see the tracks anymore. All right. By the way, somebody said I wouldn't mind getting the subscription, but Don says you need $2,000 to start up the account. It's a problem for me. Okay. Listen, if you have less than $2,000, you have to open up a cash account. I'm not going to tell you, though, that you can do a lot with it, okay? But I am telling you, if you have less than $2,000, they will not allow you to trade options in a margin account. Okay, that's actually a FINRA rule. So it's FINRA, it's not the brokerage firms, not the SEC, it's FINRA rule. So if you have less than $2,000, you open up a cash account, and that way you can trade some options over there. By the way, somebody said, are you suggesting it would be best to be delta neutral, long and short in the years to come? Dean, I'm actually not delta neutral, okay? What's going on right now is, okay, we're going to constantly flux through sector rotation, and it's going to turn in very rapidly, okay, because the Fed is influencing the bond market. Sectors and rotating in and out of sectors is going to rapidly become the in strategy. It already is right now the in strategy. And a perfect example is today. Tech flew higher today. Financials got killed, okay? And you're going to see this day in and day out. You realize that the 2 days previous, financials were flying and tech was getting hit. It's interesting, okay? All right. Okay. By the way, if I already have the ability to buy or sell puts in my IRA account, do I need other paperwork with TheoTrade to be able to sell? Okay. So, John, I'll clarify this. So, John, you can actually you can shoot a message into TD TheoTrade and just say, what's my level of options clearance? And they'll tell you. Or you can go directly on their website and they'll actually tell you the level of options clearance. Okay, you should be fine. And if you're not fine, okay, we can actually help you through the process of getting full-blown approval for it. So, all right, for newbies, okay, with stair stepping, okay, with first puts only, then puts plus skew, okay, be the steps. Actually, so this was from Archie. No, not necessarily. Okay, I'll tell you what. When you jump into this business, learn it the right way. Don't start, with like, I could kind of buy a put. It's pretty easy to get a handle. The way that we build the criteria here, it's pretty easy to get a handle kind of on everything. Like, we're going to wrap this thing and we're going to envelop you in it because we're going to tell you this is exactly the put to buy, which delta to buy. We'll tell you which options to sell against it. Okay. Kind of, again, it exposes everything. So I don't want you to come in timidly. Okay. What you do need to do, though, is if you're brand new to this, don't come in timidly and like kind of go halfway into the strategy. Come in, okay, full blown, but trade extraordinarily small. In fact, that goes for everybody right now. Trade extraordinarily small. I think that's important. Okay. By the way, somebody said, how much bad news unemployment is already priced in? Seems like the market is accounted for and won't be so bad. JP Morgan was down. So Deborah, here's the problem. Unemployment right now, nobody actually really knows. People have been furloughed. There's unemployment. Like I was mentioning, Michigan's got like 25%. 25% of the working population is already filed. But they said maybe half of those are probably furloughed. We don't know. And that's exactly what the Fed was saying too. They don't even have a grip, okay, on reality right now. And by the way, their words, not mine. There is zero clarity. And that's also something that Jamie Dimon was talking about at JP Morgan, okay? Nobody knows right now. All we know is that the monstrous amount of stimulus, okay, there's a feeling right now that that is going to be our savior, okay? Is it? Well, that's to be remains to be seen. So we have lost our way, and this rally is just displaying a little bit of that. So it says the key is selecting the right stock and the right option, okay? Okay. Somebody said, Martha said, what's not explained is how to pick the right stock. So Martha, in the course, we discuss quite extensively stock selection. And when you're getting short, there's some really definitive stock selection kind of criteria over there. I think that's also fairly important. Okay. By the way, Tony was talking about he's up in Canada. By the way, if you're in Canada and you have trouble getting a brokerage firm, okay, we can help you with that. All right. So we can definitely help you with that. Again, in Canada, you need to write the right brokerage firm. Some of the brokerage firms are a little bit more expensive. I totally understand. Again, we've dealt with that extensively in the past. Listen, I think we've got almost all the questions answered. There's a couple more here inside of the chat room. Again, the whole thing is $297. That's it. It's just 3 months. And again, it's not a membership. Don't call it a membership. By the way, I want to thank Kamel H. from California, Aaron B. from Wisconsin. It looks like Nick S. from Washington, Jeff W. from Kansas City, Robert and Christine from Indiana, Natalia O. from Florida, I think it's Mason from Michigan, Terry B from Michigan, Archie from Virginia, Joseph from Washington, Corey from Texas, Tom from Florida, Joe P from Arizona, Richard from Ohio, Barry K from Pennsylvania, Sharon C from New York, Roger A from Canada, and Jeff O from Ohio. Again, we have 30 riskless spots. It looks like off the top of my head, I think I just rattled off about 17 or 18 names in there. So we have a few more of the riskless spots left, but there's a lot of people obviously in queue. I want to make sure, okay, that you guys got this, okay. By the way, Trader came in and said, hey, thanks, Don. I think I can learn a lot here. I'm telling you guys right now, come in like literally tomorrow morning. I start each and every day. So I start broadcasting at 9:22 Eastern Time. Again, 9:22 Eastern Time. Come in there. You're new, okay? Look around a little bit. I think you guys are going to be absolutely shocked at how much we do for $297 for 3 months, okay? And again, it's not an introductory price. It's $297. We make it completely riskless for the 30 people that enrolled tonight. Listen, I know I've gone way over time, just way over time. I want to thank everybody for joining us tonight. Again, go to TheoTrade.com/collect. Enroll now. It's completely riskless. Okay. It's $297. It's not a membership. You guys are going to love what we're going to do. See everybody tomorrow morning inside of the TheoTrade chat room. Have a wonderful evening, everybody. Bye-bye.